It's started in the green and now to hold on to those gains. So there you go. Straight off the bat, 23,540. The Nifty Bank at 5220. The Sensex at 77,650. Mid-cap index starting about 0.5% higher as well. Almost immediately, there is a bit of a a sell-off which is ensued. But this is very early. We'll see if there is some general lift after all the selling which has happened lately, which has come through. So blinking red and green, 20 higher, 22. So started 60, 70 higher, went into the red and back up about 30, 35 points. So 23,564 is where the Nifty is now starting at. Advanced decline is positive, although it's still very early. The Nifty heat map has come into view, and I think you've got about 18, 20 names in the red. Some are still starting up, but I think there is more up than down, at least in the first minute of the open. So 55 points higher on the Nifty.
Well, a few stocks that are in focus. Muthoot Finance have gone ahead and they've upped their gold guidance to 25%, growth guidance to 25% from 15%. That was one of the stocks of the day that we mentioned earlier today in our morning chat. And the other one is the aluminium players. Nalco is firing away, Vedanta is firing away, as well as Hindalco is higher in today's trading session. That's because their export rebate tax that earlier the Chinese producers were eligible for, that'll be done away with from December 1st, 2024. And on the back of that, all these stocks are firing away in today's trading session. On the flip side, IGL, Gujarat Gas, both of them slammed back. IGL is down close to around 10%. Manappuram on the flip side, well, that's down close to around 2%. But Mangalam told us earlier today, the stock to watch on the downside is Honasa. And that one, that's closed, 20% down. Mangalam, take it away.
Locked in lower circuit, three-pronged problems for Honasa, distribution-related issues, the core brand not doing too well. At the same time, the consumer sentiment on the whole is fairly weak. So for the next few quarters, maybe people would put their call on Honasa at bay, and as a result of which there is a bit of a seller's, buyer strike on Honasa or a seller's circuit. On the way up, however, we are seeing decent traction on, names like Brainbees, which had reported a good set of performance as well. So Brainbees opened well. Then you have, a bunch of these stocks doing fairly well. Crompton Consumer. Upasana did tell us that the results were good. We spoke to the management as well. They're speaking about a better outlook for the second half. Is among the top F&O gainers with a gain of almost 5.5%. On the back of Crompton and good performance coming in from some of their acquisitions, Butterfly for that matter, that stock too is holding with gains of about 2%. The stocks which are not doing particularly well have to be the city gas distributors and a couple of these others as well. We have Deepak Nitrite, which is lower, Strides Pharma, Alembic Pharma down almost 2.5%, but it's largely news driven. Stocks which have decent news backing them are seeing good traction. Sudarshan also told us that Hero MotoCorp reported good numbers, fairly optimistic commentary coming in the conference call as well. That stock up around 4% on the back of good numbers that we've seen. We saw Eicher Motors be the top Nifty gainer in the previous trading session Thursday, that was, and now today we have Hero MotoCorp. So aluminium stocks, Hero MotoCorp among the top Nifty gainers, and we have the top losers in the form of city gas distributors and Honasa, which stands out with a 20% lower circuit.
Absolutely, and the market's it's unchanged. I mean, nothing on it. 1 point change after the first couple of minutes of trade. 23,540 is where we are trading at. So we are, I think, still around the 200-day moving average, almost exactly at the 200-day moving average as we begin and get going with this session. Suzlon is up 5%. I mean, Suzlon, just a complete brutal sell-off, right? I mean, the low on Wednesday was about 53. It's come back to almost 60 rupees now. So keep an eye out on that one. We mentioned Hero. Hero had sold off to about 44.60. It's come back to about 47.90 or so. So some of these names have, been sold and how. Maybe look at HAL as well. HAL is starting about 3.5% higher. The recent low was about 3,900, back close to about 4,300 now. Nigel, of course, has been highlighting Nalco. Nalco is up, is the biggest volume-led gainer, by the way, 5.5% higher on Nalco. I think we mentioned Muthoot Finance, and you'll hear from the management in just a bit from now. Stocks up 5%, so 1864. I think the recent high was closer to about 2,100. Stock fell to about 1,750 or so, and about 1,850, 1,860 right now. So these are, basically reversals, turnarounds whatever you want to call it. But we've seen a fair bit of activity and movement in the last few sessions. The big loser is, of course, biggest volume-led loser is IGL with a 10%, I think, limit down 10%. So 365. PNB Housing got that. There was that big block which happened. It's down another 6.5 actually. 845 on PNB Housing. Akim's drug sort of just hasn't stopped falling. I remember speaking with the management early last week after results. It's a recent listing. And stocks at about 553. It's fallen below what it came to the market at. MGL is down another 10%. I mean, and of course, Mangalam pointed out Honasa, which is seeing absolutely no bids at this point. We're back down about 40 points, 23,493, just under 23,500 is where we are now trading at. Mihir Vora is with us, Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Good to have you with us here this Monday morning. It's been, I mean, tough since that top in September, those highs in September. Frontline indices down over 10%. How have you been navigating this, and what is the advice for those who are watching, Mihir? The point is when we say, well, go buy the dip, you've got to have created cash to be able to go buy the dip. Otherwise, you're just sort of you're seeing prices fall, portfolios under pressure. And I reckon some of that is playing out as we speak. What's your sense?
Good morning, Prashant. Always a pleasure. So, Prashant, I think there is cash on the sidelines because last month again was a record month for mutual fund inflows, and I'm assuming that the other inflows continue in the insurance, EPF, NPS space. So there is institutional cash definitely out there. If you look at the net buying numbers, they're not that large. So there is cash on the sidelines, definitely. The markets are at crucial support levels. A lot of the indices, the mid-cap, the Nifty, etc., have come very close to that 200 EMA, which typically tends to be a big support unless things are completely awry. But I don't think things are completely all right. I think what's happening is that there is a little bit of a divergence between the Nifty, which is the most popular index that is being followed, and probably the broader indices. So if you look at the Nifty, because of a lot of global sectors and some financials in MIT, we have seen earnings downgrades, and obviously that did lead to a correction in the Nifty. But on the broader market fronts, the results have been more, I would say mixed rather than negative. So for the small cap indices or for the NSE 500, really we haven't seen earnings cuts. So I think maybe the Nifty is becoming a little bit more globally exposed in terms of the behavior. And the domestic, more domestic looking indices are doing quite well. You're asking what we are doing. I mean, we are quite lucky that we launched a small cap fund last month, and we are in the process of deploying. So I'm not complaining for the deployment of that fund.
Right. So what sectors are you backing in the small cap? What's looking good after this fall?
The same ones, Mangalam, that we discussed, the domestic themes look good. I'm still positive on premium consumption, financialization, savings, all the physical asset creation themes like, capital goods, construction, real estate, infrastructure. I don't think too much has changed, frankly speaking, as far as the themes are concerned. I think what's also happened is Indian markets obviously did very well. We are looking at the outflows that we've seen in October and November, which is huge. There's no, doubting that. I mean, there's no debating the fact. But we tend to forget the fact that June, July, August, September actually saw more inflows than the outflows that we've seen so far in October, November. So India did receive a disproportionate amount of money. Maybe it was passive funds, maybe it was the general trade, the global trade. But because we received disproportionate amount, we are probably losing that, that big of a fraud. So I don't think it's a vote against India globally. Money is being withdrawn from emerging market funds, from global funds into US-based funds, which is natural. But I think this is, a one-time knee-jerk effect that's happening because of the US election results. Because if the Democrats were in power, the status quo would have been a weak dollar, record deficits, gold, etc. going on, inflation going high. But because now it's the Republican Trump in play, many of those trades are being unwound. So it's not necessary that the dollar will end up being stronger 1 year down the line, 2 years down the line. But the unwinding of trades, which was pro weak dollar, is probably what we are seeing. So my guess is that typically fund managers, hedge fund managers, etc., don't want to keep positions into the year. So as we end November, these trades should come to an end, and we should kind of see less volatility.
All right. Hi, Mir. Good morning and good to see you. And Mir, the past quarter was the most disappointing in multiple quarters in terms of earnings. Do you think quarter three actually could be a pleasant surprise? I ask you this because the government spending has picked up substantially. And also, if I look at the various collection and GST collections as well have been fairly strong. So there are indicators that actually that slowdown could have been transitory in nature. Would you back that point and believe that earnings could pick up from here on?
Certainly, you hit the nail on the head. Government spending was very weak, and that can be attributed to the election year impact. In fact, I just saw a report from ICICI Securities. It does compare how spending slowed down in 2020 and then in the first half, and then in the second half, it picked up sharply. And the argument being made is that it typically happens in an election year. So there is a very good chance that you might see very accelerated government spending in the second half. The other potential positive is that before Diwali and during Diwali, we were seeing a lot of negative commentary on secondary sales or other primary sales for a lot of consumer durables, etc. But that negative commentary seems to be receding, and people are incrementally beginning to talk about the fact maybe it's not so bad. Things have been okay in terms of primary sales. So fingers crossed with government spending and the primary sales coming up. I think we should actually have a good second half. Yes.
It'll be very interesting to see whether that gets reflected in the markets or not, because right now every bit of flatness is being sold into. We're at the low point of trade for the Nifty, has broken below that 23,500 mark as well. And this decline has been led by the IT stocks. So if you pull up the IT index, you'll have the IT index at the low point of trade. In fact, down by almost 2%, led lower by some of the biggest movers. We have Infosys, Wipro, TCS, all the heavyweights currently at the low point of trade. And it's not just the IT index. We have, the Nifty Bank too, which is just below the flat line right now, has given up some of its opening up moves, if one were to call that a flattish sort of move that we saw. And all of that is reflected in the advanced decline too. When we started trade, we had more stocks advancing than the number of stocks which were declining. That lines have now flipped. We have around 1,500 stocks in the red. Early, moments in the day so far, but 1,500 stocks in the red for just about 800 in the green itself. And market seems to be, seeing sell-off at every sort of up move that we're seeing, or even a flattish sort of opportunity.
No, I mean, and I think we are slightly just below that 200-day moving average as well. Although this is still the first 15 minutes, inside of the first 15 minutes of trade that we're seeing. By the way, Mangalam was talking about Honasa. Honasa has now fallen below its IPO price. So that's a sort of been a Q2, of course, has been a disaster. But the stock, of course, also taking it really on the chin.
No, more than the Q2 being a disaster, the problem is that there is no visibility for the next couple of quarters. And when the consumer sector anyway was weak, more on the street were betting on Honasa's outperformance when it came to growth. Because time and again, the management has been talking about, growing at least 2x the pace of the industry. And that's why, despite lower margins, the street gave it that long arm, believing that there is growth out here. But now two key problems. One, distribution related problem. That wouldn't be as much a problem had growth come by in its mother brand. The fact that the mother brand is not doing too well, which is Mama Earth itself, and that itself would take a couple of quarters to come back, or the management would rework their strategies around that, along with a few quarters of distribution led efficiencies to come by as well. So for the next 2 to 3 quarters, the game for Honasa is pushed back, and if and when growth comes by is when the street would start taking a relook at Honasa, because up until now, everyone was betting on growth. Growth has been put into abeyance for the next couple of quarters.
Absolutely. And, we'll sort of talk more about this with Mangalam as we go along. Well, I think we can wrap up our... Okay, I think Mihir is still with us. Mihir, we have the Muthoot management joining us in just 2 minutes. I saw an upgrade, I think, from Morgan Stanley this morning. Stocks up, doing well, 4-5%. They've upped their sort of gold loan growth guidance as well. And of course, at the margin, I think it is helped by the fact that some of the, the regulator has come down hard on some of the other areas, unsecured lending and so on and so forth, fintech, etc. I mean, all those things have gone down. Just any thoughts and anything you'd like us to ask the management?
No, not really. Nothing stock specific, frankly. But I think typically what does happen is that when you have a little bit of a crackdown on the unsecured part, the secured part tends to benefit. So I guess a lot of these secured lenders are in for some bump up because of that.
Right, Mir, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here on the program. And thanks indeed. So that is Mihir Vora, Trust Mutual Fund with this perspective. The market's down about, what, 55 odd points or so, 23,481. Nigel.
Well, let's focus on Muthoot Finance. That's the management on our radar. It reported an inline set of numbers. Net interest margins came in healthy. Asset quality deteriorated a little bit. The positive was they went ahead and they upped their gold growth guidance. We have with us Mr. George Alexander Muthoot, the Managing Director of Muthoot Finance, with us on the show. Hi, sir. Good morning, and thanks a lot for joining in here on CNBC-TV18. Well, what was pleasant to hear was the gold growth guidance of around 25%. You have upped it. You had hinted, but you said wait for the quarterly results, and then we'll get a confirmation. We have got that. Could you tell us this gold growth guidance of 25% factors in gold rate at what rate in comparison to what the current prices are? And also, if you could help us out with the growth rates we should look at on the AUM front in smaller segments like Belstar as well as on the home finance vertical.
So a lot of questions. I'll tackle one by one. Okay. First of all, the good news is that we have crossed the AUM of 1 lakh crore, which is a big target number for us. And we are at the company, we are all very proud and excited about it. So we have reached the 6-digit number. Having said that, your question is about what is driving the growth, etc. I feel I should delve a little deep into this, saying that there is definitely a growth story in India. And for the growth story to continue, people need funding, people need purchasing power. Of the last 2-3 years, they were definitely getting it from all sources. But in the last 2 quarters, there have been a lot of cautions by the regulator about unsecured lending. Whether it is microfinance or personal loans, unsecured lending, there have been a lot of cautions and probably a lot of instructions to banks and NBFCs, etc., to go slow on the unsecured lending. In fact, the fintechs have almost dried up. Fintech lending is almost dried up. Co-lending, everybody is very concerned about co-lending, especially to the unsecured. So banks and NBFCs exactly are not very, very keen to do a lot of personal loans, etc., on unsecured. At this point of time, I should look back only at what was during the COVID time, when banks were not lending on these areas. Then the gold loan came into play. The gold loan came as a savior. So I see the same thing now. In the last 2-3 months, we have seen quite a lot of gold loan pickup. There is demand all over the country, especially in the last 2 quarters, because I feel that there has been a slowdown in the disbursal of unsecured lending. So that is why we thought that we should be able to revise our guidance to 25% in the gold loan sector.
So this 25%, sir, factors in gold prices at what rate? I ask you this because gold has come off 6% from the recent peak. So what are you factoring in terms of pricing? And also, as I asked earlier, what is the AUM growth of the home loan as well as Belstar, which is the MFI vertical?
So the gold loan, the price factor, we don't do the price factor, sir. It is only the demand, which I told you, the demand which is coming from the sectors, from the rural areas, from all over the country. That is what is spurring the demand. Gold price definitely helps because it strengthens our portfolio and also maybe put little more money in the hands of people. Now, about the unsecured lendings, etc., microfinance in particular, they had a terrific run in the last year, but in Q1 and Q2, they have definitely plateaued. And last quarter, there was a plateau of, rather, there was no growth in the microfinance. But as usual, microfinance occasionally comes through these issues, maybe during several periods of time. So we should see it as only such a period. But we are definitely not going, aggressive on the microfinance. Probably we will see in the next 1 or 2 quarters, we'll see almost a a very low growth or almost a nil growth in this microfinance sector. In the home finance, yes, we are doing well. The gold finance department is doing well. So too the other subsidiaries.
All right, Mr. Muthoot, hi, good morning, and good to speak to you, sir. And you took words out of my mouth. I was prefacing and getting ready to ask you whether the regulator coming down hard on other areas is helping you. And I think you very clearly said that at the margin that has been a big driver, right? People are turning to gold, and gold financiers like you have been some of the oldest in the country. So, I mean, it could be faster than 25% as well, right? Because, I mean, as you began by saying people need funding and other sources have all dried up for one reason or the other. So it's possible that it's...
Continue, please. Yeah.
No, I'm saying it could be 30%. It could be higher. I mean...
Don't put words into my mouth. Anyway, what we do is, actually, we have always been conservative. We'll see whether we can do more than that also. But there are so many things, challenges which can come in the way also. If there are no such challenges, etc., I think we should be able to see. Because the point here is that people need money, sir. Spending power is definitely important, and that is important for the economy also. So people need to have purchasing power, and this is where people are using it.
So it's possible. I'm not putting words in your mouth, but you're saying if everything goes well, it's possible that you're able to do.
No, I wouldn't want to say anything.
Okay, you don't want to say it. I'm saying it. You're not saying it. But the other point of sort of there was a NBFC, another NBFC where the restrictions were imposed, restrictions were taken away. At the margin, I mean, have they come back into the market with the same competitive intensity? How has that changed things at all, if it has?
I don't think we need to comment on each individual customers. There is a lot of flavor for the gold loan market, whether it is banks or NBFCs. New players come, some players take maybe shortcuts, etc. So they pay the price for such shortcuts. So anyway, people come and go. We have 5,000 plus branches all over the country, sir. So I think competition will be there, and probably the market also is deepening.
All right. Sir, you said that when customers have no other means of income, they look to spend by raising money from the gold that they have. And as a result of which, the growth may be higher than your 25% guidance as well. But the question then is that on recovery, asset quality. What is your guidance on asset quality from here on? And on microfinance as well. What's the outlook on the IPO? Because the next couple of quarters, you say there would be nil growth.
Yeah, so the asset, but no, it is not because of this that we said the 25%. 25% is because of the demand. It is not that people are not getting any unsecured loans. They are getting unsecured loans. People are getting, a section of people are not able to get it. Those are the people who are coming to the gold loan. It's not that everybody is coming to gold loan. Some people who are not able to get an unsecured loan easily because of maybe the tighter underwriting by the banks and NBFCs, etc. Those are people who are coming for this. So maybe we will stick to the 15 to 25% growth rate, sir. We'll stick to that. And about the microfinance, yes, what should we say? The environment is not very conducive for an IPO now, and they have sufficient funding also. And I said, because if there is not going to be a big growth, the IPO can take a little more time also. Doesn't matter. It's a fact of the market conditions.
Okay, so the IPO happens sometime next year? Or maybe
it's a function of how the market is reacting to it. It is not something for Muthoot alone. It is for the microfinance sector as a whole. If things look up, then and funding is required, then we'll go for the IPO, sir. About the asset quality, for gold loan, there is no asset quality issue at all, because all these are more than 100% secured with gold loan.
All right. The last time we chatted, sir, we were trying to push you for a timeline with regard to this microfinance IPO. As you're clearly stating, for the time being, it's, not on your radar. Maybe it could be a story for FY26. So we'll revisit that at an appropriate time. As you're telling us, asset quality is not a big issue, but split it up for us vertical-wise. If you could give us a gross NPA, net NPA number for your core business as well as for the MFI business, because it went up a little bit. So give us a broad guidance we should work with, and if you could specify which vertical you're talking about.
So I'll come to the gold loan sector. First, the gold loan, the NPA is about 4.3% or so.
Yes.
But it is 100%, 110% secured with gold. Why we are again carrying it in our books is just to help the customers. I can easily auction the gold, but when I auction the gold, there is so much of excess money, I'll have to start refunding it to the customers. In fact, I'm doing very injustice to the customers by auctioning. So we are trying our best to ask the customers to pay something, pay some interest, and still carry it in our books. So even though I'm carrying it in the books, we are fully in the money. So in that sense, we are more a service to the customers than maybe a little questions from people like you about the NPA. But NPA doesn't translate into a loan. Now, coming to the Belstar, yes, last quarter it was 2.35, and this quarter it is 3.5. That is a factor for all the players in the sector. So probably it should remain there only. And for the others, it is again a tad higher. Muthoot Home Fin has come down from 175 to 159. Muthoot Money 1.67 to 2.0.
Right.
So it's all manageable range only.
All right. Mr. Muthoot, just one last question, and please call us Prashant, Mangalam, and Nigel. I notice you're calling us. We had an analyst from CLSA earlier who was telling us that on the MFI side, things will, the worst will be behind by the fourth quarter, Jan to March of 2025. Would you agree with that assessment, or you think there is more pain left? This is not particularly with your MFI business, but overall, your sense.
Yeah, but I think I'm not deeply involved with the microfinance, but I think I should tend to agree with them because these things come and go, sir. My microfinance dips and ups and downs, etc., come in this maybe every 5-6 years. So it comes. There is a dip, then the things look up again. And one thing, that's a sector which cannot be ignored because again, it is putting money, purchasing power in the hands of the very lower section of people. And it is a necessary evil, like I should say, necessary evil.
All right, Mr. Muthoot, we'll leave it there, sir. It's always a pleasure speaking with you. Thank you very much for joining us.
Thank you for the big group there, big company, all the top guns.
And we would have loved. And if you were there, it would have glittered like gold. We missed you there, sir.
But please buy some gold and keep with you. It is good.
Sorry, what is that?
He's saying buy some gold.
Some of your savings in gold.
We will. And by the way, we'll look forward to having you here in December. We have our annual Business Leadership Awards. So hope we can chat then at that event. Thank you very much. Thank you for joining us. Thank you. Well, we'll slip into a quick commercial break here. Just a quick programming note as we take that break. By the way, the market, look at the Nifty, it's collapsed. 150 points now, 23,382. We're at the day's lowest point. For the first 15-20 minutes, we were looking at between 30-40 point kind of move down and up. But this is a clear one-way move now. We'll sort of address some of the individual names which are dragging things. But have to take a break because we've got more companies joining us on the other side. But leaving you with this programming note, the 11th SBI Banking and Economics Conclave will get underway this afternoon. Catch Finance Minister Nirmala Sitharaman addressing the gathering at 2:45 p.m. There'll be other guests of honor, including Finance Secretary, the Revenue Secretary, Chief Economic Advisor. We'll have the IRDAI Chairperson, ex-SEBI Chairman, and many more faces sort of at the event, and you'll hear from them. You'll catch that event only on CNBC-TV18. Take that break. We're back. See you on the other side.
Well, it's a hot knife through butter. That's exactly what the market is right now. 170 points on the Nifty, 23,350, now comfortably below the 200-day moving average. The mid-cap index has it worse. And we were talking about how the IT stocks have not been doing well, right? Look at Wipro, down almost 4%. LTI, Mindtree, these are Nifty stocks that we're talking about, down about 4.5%. Infosys itself down 3%. And giving company to IT on the way down is a couple of these pharmaceutical names as well. So we have Dr. Reddy's, which is down about 4% as well. And then we're seeing some traction on the downside for a couple of these consumer names. Trent, for instance, had been a bit of an outperformer in the previous week after the sell-off that we saw in the week before that. Now comes back to its selling ways, down about 2%. Britannia too. Over the last 3 trading sessions, the stock has lost about 15%. So keep an eye out on all sides of the market, which are seeing a broad-based sell-off right now. The other stock on our radar on that note is Eid Parry. The company reported a weak set of second quarter numbers. The one that did well for them was the distillery segment. The revenues grew, but the profitability out there under pressure. So we do have with us Muthu Murugappan, who's the CEO of Eid Parry, joining us. Thanks a lot, Mr. Murugappan, for joining in. Distillery, the revenues grew. I presume that is on account of increased capacity out here. So if you could give us a sense of, what the capacity utilization, what the volumes in this quarter were, what are you targeting for the end of this year and next year as well as more capacity comes on stream? And when does operational performance stabilize as utilization increase? So on a steady state, what is the kind of EBITDA that one should look at specifically in your distillery business?
Yeah, Mangalam, very good morning. Thank you for having me on the show. The distillery segment has done well from a volume and throughput basis. Now, this is on the back of, yes, as you rightly said, increased capacity which has come on stream. We are also fulfilling our ethanol commitments. We also have a strong ENA business in Tamil Nadu, and this has contributed towards good growth in this segment. We ran at about, I would say, 80% of capacity utilization. We're starting to see some pressure now, and this is because of lower molasses availability. It's been a tough last 2 seasons in Tamil Nadu on account of poor rains. So this has impacted feedstock availability. So we're starting to see some pressures right now. From a margin perspective, I think we have seen a dilution of margins. We've seen a dilution of margins because of lower recovery on the cane side. Also, I think the ethanol blending policy pertaining to sugarcane-based feedstock took a brief hiatus, and I think that has also put some pressure on the margins. Beyond this, from a sugarcane ethanol perspective, we've seen consistent increases in the FRP. 2 years ago, it was rupees 3050 per ton. It's currently rupees 3400 per ton. And obviously, this raises your input cost. With capacity addition, the fixed cost positions of the industry at large has moved up as well. But unfortunately, we've not yet seen an upward revision in the ethanol price. So this has diluted margins to around 6.5% to 7% at a EBITDA basis. 5 quarters ago, we were perhaps around 16% EBITDA margins, sort of trending towards north of 20. But there's been significant margin dilution in the last 4 or 5 quarters.
All right. Hi, Mr. Murugappan. Good morning and thanks a lot for joining in. This is Nigel on this side. When we chatted earlier, I think we were talking about volumes of around 16 to 16.5 crore litres. Do you stick by that for this year? If you could help us out, what is the volume target? And since margins have got diluted, some part of that could be because of the startup costs, I'm guessing. Do you expect margins to recover a little bit in the coming 2 quarters?
Very good morning, Nigel. I think this year we will sort of move north of 17 crore litres. Okay. That's where we expect volumes to land. Yes, we did have some operational issues as we started up our larger distilleries, but I think that has settled down right now.
Right. So profitability will pick up then in comparison to Q2, right?
I think the real lever, Nigel, as I had mentioned a few minutes ago, is the upward revision in price, because you've got cane costs which have moved up significantly, and also a fixed cost position which has moved up. So I think the real lever is the upward revision in the ethanol prices, and I think policymakers are, at least we understand that it's being discussed. I think industry has made some representations. I think the real lever in terms of moving those margins up will be that, because I think your cost positions have significantly moved up on the other side. We will still run our distillery, but at a muted muted contribution because we can't, unless it's negative contribution, then, you're forced to, or you don't have feedstock availability, then you're forced to stop. But, ideally at positive contributions, you would run distilleries. But, we set up all of this capacity envisaging, a 20% EBITDA margin over a couple of years. But when you're down to 6-7%, then that significantly delays, your paybacks and all of your return metrics.
Mr. Murugappan, good morning. In the con call, you mentioned that white premium, the difference between the price of raw sugar and refined sugar, that is going to come off. Are you expecting the sugar business to get impacted? And if you could quantify that?
So Prashant, that's pertaining to the sugar refinery. It's in an SEZ in Kakinada, so that's an all-export refinery. So it largely, imports raw sugar, refines, and puts refined sugar back into the global market. Yes, the white premiums have come off, and that has dropped the spreads. And white premiums have largely come off because there's been, more supply put into the global market from parts of Europe and parts of Asia. So we are seeing a challenging H2 on the refinery business. Perhaps we see spreads now normalizing around the sort of May timeframe. But I think H2 will be a challenging period for the refinery business.
All right, H2 will be challenging for the refinery business as well. Muthu, amidst all of this, the growth driver for the company on a very slow base, small base, would be your consumer division, your CPG business. If you could tell us, what does it stand at right now in terms of a revenue run rate? Where do you expect it to be? And operationally as well, what are the steady state margins? By when do you expect to break even here?
So Mangalam, the CPG business is about 450 crores, a healthy growth of, I think, close to 70% sort of H1 to H1, largely on account of launch of the staples line, which is really dal, rice, pulses, and millets. So this is obviously a segment we are betting on. We've got a multi-decadal view on this business. I think the current run rates will I would say they will continue and perhaps even move northwards of this for the rest of the year. We will continue to invest and grow this business going forward.
Do you have any aspirational target here in terms of how big do you want it to be as a proportion of your overall sales, and by when does it break even since you're investing?
So yes, there are certain internal aspirations, and I will sort of refrain from any guidance here. But I think what we're aspiring to exit the decade with is a substantially larger business, a couple of X of where it is right now, and a high single-digit EBITDA margin, high single-digit percentage EBITDA margin.
All right, very quickly, Mr. Murugappan, before we let you go, if you could help us out with, if in case there's an ethanol price revision, what would your expectations be? What's the wish list according to you? And also, if you could tell us a rough timeline by when you expect this to happen?
So I think the industry at large and the industry bodies have as well, Nigel, made representations to the policy makers. I think it's really hard to say. I mean, obviously, we would have a certain wish list or an aspiration there, but I'm sure the policy makers will have their own views, and we're really hopeful that there will be a good meeting point.
What's the industry's wish list? What is the industry's wish list?
I think the industry, the ISMA has proposed, and this is in the public domain, I think a 4 or 5 rupee increment from where it is.
Right.
We'll have to see where things land. We remain hopeful. The sugar balance in the country is very healthy, and I think it certainly gives room to consider this positively, as well as look at MSP revisions and exports. Because as I'm sort of saying again, sector is invested, but I think our returns are well delayed now.
All right, Muthu, thank you so much for joining in and giving us an outlook on the business. Second half looks a little weak, but long-term levers well in place for Eid Parry as well. Though the markets are volatile right now, HDFC Bank is batting for the bulls. The Nifty Bank is now up 70 points. The Nifty too has recovered a fair bit from the lows of the day, and as a result of which holding around that 23,400 mark. HDFC Bank at the high point. The other one which is doing well is Bajaj Finance as well. We did hear Piran talk about Bajaj Finance as one of the beneficiaries or well placed for the next 12 months who want to put their capital in. That stock too has done fairly well in light of the weakness that we're seeing in other parts of the market. Talking about weakness, IGL, the city gas distributors, down almost 18% right now. For IGL, Mahanagar Gas 14% as well.
Yeah, the big cut though, weight-wise, right, is coming from IT stocks.
Yep.
Yes.
The Nifty IT index is down 2 3/4%.
Right.
And Infi single-handedly is putting a 50-point... actually between Infi and TCS, there is about 70 index point pressure out of the 115-point cut that you see. And guess what? The third name is, it's Reliance Industries. So, Infi, TCS and RIL account for almost, 100% of the 115-point fall that we have going on the Nifty right now.
In fact, we were shut for 2 days and Nasdaq was the biggest underperformer. Even in Friday's trading session, Nasdaq was down close to around 2% odd. So maybe some kind of a rub off of that. But Mangalam, we got another management. Get straight to it.
Yes, we have Allcargo Logistics, the next management on the show. Steady set of the second quarter numbers. Net profit, of course, was aided by tax credit. But margin did decline on a year-on-year basis. Ravi Jakat, the Chief Strategy Officer, joins in now. Ravi, let's start with the current international scenario. What's the near midterm outlook for freight rates as a result of which, what are you penciling in terms of volumes and outlook for the remainder of this year?
Yeah, first of all, a pleasure being on your show. And this quarter gone by, as we have reported in our earnings as well, was quite a good quarter. We had the highest ever monthly volumes during this quarter. We saw that the trade momentum is now reviving. We have seen improved volumes across the world. We have seen the high growth markets in Asia continue to do better as compared to the last year. And now we have seen marginal, though slightly volatile improvement in Europe as well. We believe that the changing geopolitical landscape could potentially have an impact there. And if the geopolitical tensions were to be de-escalated over the coming 6 months, that could potentially revive the European economy, particularly since with the rate cuts, inflation has already been in control in Europe and there is a greater disposable income which is available in the hands of the consumer. So overall, we believe that the economic environment should continue to improve. On the freight rates, we expect them to remain range-bound. There's supply coming in. At the same time, there are also ships going for scrapping. There's chances of de-escalation of tension, which means that the supply constraints could go away, but at the same time, that would also be coupled with economic revival. So these are balances in place with which we believe that freight rate should remain range-bound. But what we are particularly happy is that across all the businesses, our strategies have been playing out, and we are happy with the performance of the quarter gone by.
So let's talk about a couple of details then. One, what were the average freight rates in the third quarter? How do they compare with H1? And secondly, what's your target LCL volume for the full year?
Yeah, so speaking on the international business, freight rates in our business is largely a pass-through, and therefore it does not really make much impact. What makes an impact is how well our containers are utilized. And the container utilization was marginally improved during this quarter on the back of better volumes, and which is why if you look at our international business, which is represented by EQ Worldwide, we have seen on an year-on-year basis, there's almost a 57% improvement in EBITDA for the quarter. And that's largely the international business excluding India. And that's been driven by improved utilization. So we believe that if we can continue to see a positive momentum in volume and we can improve the utilization, we can reduce the transshipment, which is all an outcome of improved volumes. We should continue to see improved margins in terms of gross profit per unit of volume that we handle. Gross profit as a percentage of revenue is a bit of a misnomer in our business, considering that a large part of ocean freight rates are largely a pass-through.
And volumes, what are you targeting, the LCL volume? For the second quarter, they were up, around 4%? So
about 5%. Yeah, so if you look at the volumes, about LCL is about 5% up, FCL is about 7% up, air freight is about 13% up. That's on the international business side. And before I dive into domestic, let me conclude here. I believe that we would continue to outperform the trade market growth by about 3 to 4%. And we have seen that in the last year, it was negative and we were kind of holding flat. Now that the market has become flat to 1%, we have seen 4 to 5% growth. Long-term average for LCL growth is about 6% for the last 8 to 10 years. And we believe that we could do 3 to 4% over that. So that's a data that we have always been guiding towards. And we believe we remain confident that we would continue to outperform the market growth. But the market growth itself could be volatile, ranging from a couple of percent growth to, recovering back to 6% normal growth as the economic situation improves.
All right. 2 quick points before we let you go. One, expected growth in contract logistics. You've gotten a bunch of new clients and you've increased your revenue per client in that business as well. And that's reflecting 46% growth in your overall revenue in contract logistics in the second quarter, with margins at around 5%. Where does this number settle for both margins as well as growth?
Yeah. So I think, contract logistics business has significant opportunities to multiply. And you have seen over the last 2 quarters, there's been a sequential growth quarter on quarter of a significant proportion. Year on year, like you rightly pointed out, it's almost 46% growth in revenue. This is on the back of two things. One, we are very successfully expanding into new domains. What used to be a chemical contract logistics business a few years ago, now chemical is just about 35%. The largest segment for us is now e-commerce, and we are rapidly expanding into quick commerce business, which is more than 10x in last 3 years for us. This is managing their inventory, warehouses, and even some dark stores. And that's a business which we believe would continue to have positive momentum. We also had non-restriction on chemical transport, which went away during the quarter gone by. So that's another set of opportunities. So if you look at the contract logistics business, we have been able to maintain profitability despite a focus on growth. And what I mean by that is when you're focusing on growth, you tend to have higher white spaces. Historically, what used to be about 4-5% a couple of years ago, we are now at a double-digit white space, but that is something which allows us to invest in capacity and grow the business rapidly. We would continue to have that approach for the next couple of years as we see immense opportunities in this business across e-commerce as well as other domains like auto and engineering, which have also done very well for us. And on the chemical logistics, we continue to remain the market leaders, and we will maintain that position strongly. So overall, a very promising opportunity on the contract logistics business. And express logistics, which is the other domestic business also, like you would have noticed, we had the highest ever business in the month of October, and we are seeing strong momentum in that as well on the back of improved service levels at Gati.
So does it turn EBIT positive in the remainder of these 2 quarters? The
we believe that
distribution business?
Express distribution should turn towards the EBIT positive with the performance that we are seeing.
All right.
All right, we'll leave it there. Thank you very much for joining us. Interesting conversation, and hope to speak with you soon again. Thanks indeed. Markets recovering a little bit, about 50-60 points off the day's low, but we're still down about 100 points. It's a triple-digit knock, 23,430 is where we're at. And the point is, so many single stock accidents in that sense, with all the city gas distribution companies down, all of them down. At least IGL and MGL down over 10%, Gujarat Gas down 5.5%, GSPL is down sharply, and many more. Honasa is down 20%. The Tega, which is down about 10.5%. I'm not sure if there were numbers here with this one, but that is a large cut on decent sized volumes. Usually it doesn't figure with large volumes, but it is coming up now. Indo Count is down 6.5%. There's Arman Financial down 6.5%. I think that's a MFI, all with volumes as well. Niva Bupa, which is only, I think, day 2 in the listed space, that is, I think, down about 1.33% or so, Niva Bupa. So, yeah, there is a fair bit in terms of individual action going on. Market breadth is now about 2.5 stocks down as compared to every one stock which is higher. So it's clearly now turned the other way. We're going to come back. Mitesh is going to be with us with some technical trading ideas on the other side. Stay tuned.
Welcome back. Well, the Nifty has recovered close to under 100 points from the low point of the day. And Grasim, they spoke about the paints penetration really picking up. They're saying their reach is increasing as well. And they are sounding very, very optimistic about business. So after starting off in the red, that stock has seen a good recovery. The other one, and the reason that the markets are recovering and one end is being held up, is because HDFC Bank. It went down to around the 50 DMA, the 100 DMA, but it's taken support around those levels. So 1,680 to around 1,700, that's the extremely crucial mark. The stock has bounced up those levels, and that's holding one end up. Mitesh Thakkar is back with us. Mitesh, 100 points bounced from the low point of the day, but is it sustainable? Well, time will tell. Your take, and what about the individual stocks?
Morning, Nigel. So I think, one, it is the bank Nifty, as you rightly highlighted, is the one which is taking the lead, and HDFC Bank is one of the recommendations. I think the entire hope of, reversal will lie with how the bank Nifty goes on and the stock of HDFC Bank does. My sense is that once the bank Nifty manages to cross 50,350, and we had a high of 53.67 a few minutes back, sustaining above 50,350 for about 10, 15, 20 minutes should suggest a breakout, and we could see a pullback to about 50,520, and in a good case scenario, 50,640. So I think keep a watch on Bank Nifty. That would be the index which would be important for today. And on the trading calls, as I said, HDFC Bank is a buy. Keep a stop at about levels of 1,700 or maybe 1,698, and look for a target of around 1,750. While granules for me is on the sell side, it's breaking below that key support of 540, 538 zone. So keep a stop at about 540, sell for targets of 505.
HDFC Bank holds the key for today's recovery. Thanks a lot, Pradesh, for joining in and giving us all of those details. Let's focus on the bright spot, though. You have aluminium that's twinkling today, and that's because LME prices are up 5% on Friday. The reason was China announced withdrawing the export tax rebate for aluminium as well as copper effective December 2024. Now, this rebate on exports of aluminium as well as copper in China was earlier at around 13%. Now, China's aluminium exports have moved up drastically in the first 10 months of this calendar year and should end up this year at around 6.5 to around 6.6 million tons. Now, Chinese aluminium exports, they represent close to around 15% of China's aluminium production and close to around 20 to 22% of the production outside China. Aluminium exports from China are expected to decline from December 2024, and that's what in turn could support aluminium prices. So owing to the surge that you've seen in aluminium prices, we have Nalco, which is the biggest gainer, followed by Vedanta as well as Hindalco, the bright spot, so to call it, in an otherwise wobbly market. Tell you what, we'll slip into a short break, though. On the other side, our special segment is the economy. Lata will be in conversation with Ashish Gupta of Axis AMC on his latest report on domestic mutual fund inflows may no longer be sufficient to keep stocks elevated. Stay with us.
Hello and welcome. Today on It's the Economy, we discuss an interesting report by Ashish Gupta, the CIO, Chief Investment Officer at Axis Mutual Fund. Ashish argues that although domestic mutual funds inflows have been continuing and rising, two factors are hurting or can hurt the markets. One, heavy selling by foreign funds, of course, in October, a little less so in November, and huge supply of shares, either because promoters are selling, PEs are selling, IPOs are raising money, or older companies are raising via QIPs. In fact, in the second half of the current year, that is starting October, the number of IPOs lined up are 3 times the number of IPOs in the first half, says Ashish, looking at draft filings. And so, of course, the question is, have you already seen the peaks for this fiscal year? Joining me, of course, is the author himself, Ashish Gupta. Good morning, Ashish. Thank you very much for your time and for a very interesting report. So your worry is that it is not FPI selling which is bringing down the market, but rather the excessive supply by IPOs and companies?
So, Lata, what we wanted to highlight with this report is that ever since 2020 post-COVID, the Indian market has had primarily moved in one direction, despite whatever the direction of foreign flows have been. So if you go back and look at 2022 and 2023 financial year, you had actually, even in those years, FII selling coming into the market. And if I recollect correctly, in 2022, there was $18-19 billion of foreign selling, but the market actually continued its uptrend. And the reason for this has been that domestic flows, both through the mutual fund as well as direct retail investment, continue to be strong. But since April 2023, we actually have seen that the supply of equities and what you mentioned in the opening in forms of promoters selling, in form of IPOs and QIPs, has already been in excess of the flows into the funds. So really, the message we want to give to investors is that just because mutual fund flows continue to be strong, and last week the numbers of October were out, mutual fund inflows reached a new high of nearly 40,000 crores, with SIPs at 25,000 crores, you still had a downward momentum in the market. And the reason has been that in the past 18 months, nearly 40% of the supply of paper in form of IPOs and QIPs was actually being subscribed by foreign investors. Right? Okay. And so our expectation is that going forward, looking at the fact that this supply is so large, the direction of the market will be volatile and will also depend on the direction of foreign flows, not just what is happening on domestic flows.
Okay. So we can no longer rely that because we have an equity culture coming in, savers turning investors, that does not neutralize all the other negatives, is your point. Okay, let me take one by one of the negatives. The first, of course, is this huge FPI selling. See, even if you look at your October and November numbers, October, the sale was nearly $12 billion, 11.2 billion, if you look at the net number. Yes. But in November so far, the sell is more like 1.8 billion or thereabouts, 2 billion. So do you think that, the China factor hurt us a lot, but the Trump factor is not seen as so seriously India negative? In fact, today CLSA has put out a report saying that they are reversing the sell India, buy China and making it again sell China, buy India. So do you think the FPIs have a good chance of becoming neutral or even positive?
So I think the medium to longer term direction of FPI flows, I'm sure, towards India will continue to be positive. I think there's no two ways about it. India remains one of the few consistent structural growth stories. As we know, it's the fastest growing large economy in the world. So there is no reason to assume that the direction of foreign flows over the medium to long term will be negative. If anything, in the last 4 years, because FIIs have not invested significantly into India, even as India's weight in global and emerging market indices have gone up, they are already very underweight on India. So the medium to long-term view is certainly positive. Of course, that does not mean that week to week or month to month you cannot see volatility in FII flows. And frankly, more than the China factor, I believe what was visible in October was outflows from emerging markets, also because the US bond yield went up nearly 75 basis points, right? And we had seen since end of last calendar year, pick up in foreign inflows as US bond yields had moderated. So I think one of the biggest variables that will drive the direction of foreign flows will be really how the yield moves happen. If the higher for longer rate narrative starts to fade away, I'm sure you will see acceleration of foreign inflows.
Okay, so we have to look at the US yields very closely. Now, you are also speaking about the other negative for the market is the excessive amount of money that is being drawn by IPOs, QIPs and promoter sales. Do you think that will peak off as the multiples become more normal? I mean, we are already about 10%. We are in correction terrain as far as the Nifty is concerned. We are 10.5 down. And mid-caps, we are down nearly 12% from the September highs. So won't the sales by IPO and QIP guys lessen?
So certainly we have seen some correction, but again, if you see roughly the market is where it was in July, right? So I don't think the valuation correction has been massive to really drive a rethink in terms of people planning these stake sales or IPOs. In fact, the correction in multiples has been lesser than the drawdown in the market because in the past 1 month, earnings have also been downgraded. So if you look at the PE multiples, they have not contracted by 10 to 12%. I believe in the coming 6 months, really that is the time period we have visibility on supply. In addition to the IPOs and QIPs, even on stake sales, you will actually see a pickup because, when there's an IPO, all the pre-IPO investors get logged in for the period of time. And given that even last year there was a big acceleration in IPOs compared to 2023, you will actually see more lock-in expiries happening and that supply coming to the market. So I believe at least over the next 6 months, the visibility we have is that there will be between in the second half of this year, somewhere between 3.5 to 4.5 lakh crores of primary plus secondary supply of equity.
Oh, that's a lot of money. And no mutual fund inflow is that big, even if it continues. But you also end your note on a positive note that probably the capex, private capex cycle is picking up. Are you confident that all the equity raising IPO plus QIP is leading to a private capex cycle?
Certainly, I think we are seeing in terms of IPO, again, the IPOs have two parts to it. Part of the IPO is also secondary stake, so offer for sale. But if we net that out, still over the last 18 months, about $25 billion of primary capital has been raised by corporate India. And we are seeing this being raised in sectors like power, real estate, autos, and these companies certainly have the investment plans. And again, you would have seen the order book numbers that many of the capital good companies have indicated. So we are continuing to see a positive momentum in private sector capex. Of course, even the government capex after the pre-election lull has started to pick up in the last 2-3 months. So we continue to be positive on the capex cycle.
Okay. I never have enough time with you. I have to pay attention to the debt and the banking sector as well. We saw this huge influx of FPI debt into India because of the index inclusion. That seems to have petered out. And now US yields have also risen. So two things. Do you think the yield rally is over? Now we are going to see Indian yields also kind of at higher levels. And therefore, does that make life easier for banks? Because they saw a lot of competition with people raising corporate CPs and, bonds. Now, do banks get a little more elbow room because there isn't so much competition from the bond market?
So I think for banks, the bigger challenge has not been in terms of the credit demand. I think in the last 12 months for banks, the challenge has been in terms of really the deposits and liquidity. And there as well, I think in the last few months, we have seen some easing in the liquidity environment. Of course, RBI has also moved to a neutral territory in terms of their stance on liquidity. And I think that is the most important really driver for bank in terms of growth, the amount of liquidity and amount of deposits that are available to them. I don't think in India we have a challenge in terms of really credit demand. As such, whatever slowdown we have seen in the last 9 months in bank credit is either because of lack of liquidity or because of regulatory actions.
So do you think the deposit craze is over? Are deposit rates peaked off?
So I think we have seen now deposit growth rate starting to match the loan growth rate. So both are around 11.5%. Unfortunately, this matching as of now has happened because of loan growth coming down rather than really deposit growth accelerating. I think what we need to see is that as the liquidity kind of sustains itself, can we see a pickup in credit growth as well as deposit growth? So I think we need to see that still to happen. I think the central bank actions will be quite important to watch in that regard.
Okay. Well, sorry, out of time, but it does look like banks have a slightly better investor sentiment with the bank Nifty at the moment being the only one that is in the green. HDFC Bank is something we should watch very closely. Well, I have to take your leave and a promise to have a more detailed discussion on another day. Thank you very much for joining us, Ashish Gupta. It's curtains also on Bazaar with the news that there is still a lot of pressure on both the mid-caps and the big indexes. It's just the bank Nifty holding just head above water. Thanks much for watching.